Hello, ladies and gentlemen. Good morning to you and welcome from the public holidays. Trust you're all doing well this morning. So, I would like to get your feedback. If you can see my screen and you can hear my voice clearly, kindly type in hi in the comment section so that I can be sure that we are all good to go here. So, I would like to see some feedback, please. If you can see my screen and you can hear my voice, please type in hi in the comment section. So what do we have here? Okay. All right. 5126721. Thank you very much. Good mayor. Good morning to you. PKDMC. All right. Good morning. 679. Good morning to you as well. Vivi. Hello. How are you doing this morning? Raven Crow. Good morning. Hey Carrie, how are you doing this morning? Thank you very much. All right, so with a couple of feedbacks here, I would rather take this as a positive confirmation that we are good to go this morning. I'm so excited to welcome you all to yet another promising session on the Extreme Speed Live. My name is Sheriff Daramola, and for the next 1 hour, I will be your host as we deliberate and review the financial market using technical parameters to identify trading opportunities lining up for us today. And for those who are joining us for the first time, you are highly welcome on board, as I'm so excited to have you guys around. So what we simply do here on a daily basis is to analyze the financial market. So we do have series of financial instrument that we have chosen at the beginning of the week, and what we do is to continue to monitor those pairs, looking out for more trading opportunities, and at the same time sharing out ideas on how to manage these positions. And this happens on a daily basis, 10 a.m. UTC, and I implore you to continue to be part of the session. It might look a little bit overwhelming at first, but I assure you that with time, you get to understand how this works, and you will be able to use your own discretion using the information you have here to make your own decision on these commodities. So once again, you're welcome on board. And on this note, let's dive into the business for today. And as you all know, what we normally do here is to first of all ensure that we keep tabs with the fundamental aspect of the market so that we can see what everyone is actually looking forward to that might likely serve as a catalyst to drive price movement in whatever direction we are positioning ourselves for. And obviously, since yesterday, we have had some couple of profitable positions, as we saw how the US dollar surprisingly gathered some strength against its rivals during the New York session yesterday. And since the early hours of today, we are beginning to see some normalcy coming to the market as the dollar appears to be doing some struggling at this point in time, which I will probably call it a retracement phase, as we are not yet sure, but we shall be looking into this in details from the technical standpoint to decipher if it's actually a retracement phase or probably a reversal setup. So on the economic calendar today, looking at the event for today and taking into consideration the pairs that we have been monitoring since the beginning of the week, there are no macroeconomic event to look forward to today. I mean, high impact macroeconomic event to look forward to today. But I would advise us to also take into consideration the high impact event coming up tomorrow, Wednesday. As you all know, that even though we don't have any economic event to look forward to, there is a high tendency that majority in the market will be anticipating this event for tomorrow. And because they are anticipating this event, we shall be seeing the reflection of this anticipation on the chart as price action. So we want to see how participants in this market are currently reacting to the current market structure in anticipation of tomorrow's event. So tomorrow we have the CPI, we have the Bank of England's governor doing a speech tomorrow, and then we also have the FOMC minute, which everyone is obviously looking forward to, as this will be giving us an insight into the rate hike decision that is expected for the month of May. So with that being said here, let's dive right into the current market structure. And as usual, the first commodity we are going to be looking at this morning is the US oil. And in fact, the US oil has been experiencing bearish momentum so far, though we had some couple of choppy situations that happened during the later part of the New York session yesterday. And during the live session, the first thing we observed here yesterday was the fact that price was trapped within a range, I think about a $15 range, there are 15 cent range rather, where we saw price action reject the $81 level by the sellers, negating all attempt by the buyers to break out of that structure. So that was where price action started the week, and then we saw price drop into the support line here at the $80.45 level to give us a beautiful flat channel. And you all know what we look out for whenever we have this kind of simple setup. We want to see price action either break out of the channel to the upside to give us a buy opportunity, or a breakdown to of the channel for selling opportunity. And as you can see here, I think the first hour into the New York session yesterday, we saw this breakdown of structure which triggered our sell position, and at this point we had our first sell position for the week. And like you all know what we do whenever we have a situation where price action moves significantly well in our favor, the next thing we want to be doing is to ensure that we move our stop loss accordingly to lock in some profit or protect our position against any sudden pullback that might likely happen. So despite the fact that price action moved about how many pips is that, about 80 pips thereabout, we saw price action snap back into our entry, hereby taking us out of all the sell positions that we had. And if you had been taken out, you might have been taken out at your entry point, or probably taken out at an area where you have moved your stop loss to lock in some small profit, maybe a 10 pips profit or 20 pips profit thereabout, depending on your tendencies. Now the situation we have right now is still looking a little bit bearish at this particular point in time, as we have seen price action come back to do a retest of that support line at the $80.45 level, which happened to have been broken to the downside during the course of the New York session yesterday. So we had the first rejection here, that was yesterday during the, I think, about 4 or 5 hours into the New York session, and then we had a couple of retests again happen during the early hours of today to further emphasize the strength of the sellers at that particular point in time. And if you had actually taken advantage of the retest of the structure, well done to you for being on standby to have caught that move, as you will currently be running with a minimum of about 45 pips in profit at this time. So for those who are taking advantage of this sell position at the $80.45 level the second time, well done to you for being on standby to catch that move. And the next thing you know we want to be doing right now is to ensure that we secure this current position so that we don't get caught up in any sudden pullback that might likely take us out of this position in a loss. And at this point in time, I will be suggesting that we move our stop loss to somewhere right around the $80.25 level, so that we give room for price action to breathe, just in case there will be a couple of retracements or choppy situations before another wave of the bearish momentum will continue. And another reason why we want to ensure that we move our stop loss to secure the current position is simply because price action is currently trading around the very important key level at the $80 level. Remember, we identified the structure during the course of our live session yesterday, And at the same time, price action is around a zone which has a strong memory for buying power. Now, if you look at what has been happening on this chart in the last 1 week, you will see that every attempt by the sellers to break down the structure has been met with strong resistance from the buyers. So you can see every attempt, every situation where price drops down here, we saw buy pressure resume taking out all the sell positions. As you can see, at every point in time that happens, we saw this. Even during the course of yesterday's trading session, we saw the same thing happen here. So we are within the buyer's territory at this particular point in time where anything could actually happen. So that is why we would need to ensure that we secure the current position with the hopes that the appearance of more bearish signal will give us an opportunity to add more position to our existing trade. So right now that we have secured our position, the next thing we want to be doing right now is to have an holistic view of what is really going on in this market. So to do that, we want to scale up a little into a much more higher time frame to see if the bearish momentum that we are witnessing so far will continue to hold, or this might likely be a situation where to shake out some buy positions before another wave of bullish momentum will happen. So in that regard, let's dive right into the daily time frame, and for the sake of those who are not part of the live session yesterday, so that you can also have a view into what we were looking at the beginning of the week. So now right now we are back on the daily time frame, and obviously the structure, if you have been with us for the last couple of months now, you would realize that the structure has not changed at all. As since the second half of last year, we can see that price action has been bearish, and during the last quarter of last year till about a couple of months ago, we saw how price action has fell into an indecisive phase, which is characterized by a consolidation phase here, where price action appeared to have been trapped between the $80 level and the $70 area, to further emphasize that there is an indecision in this market. However, when we look at the current structure here, let's zoom into the last couple of weeks in this market. We saw this bullish momentum climb to the upside before the OPEC Plus decision prior to last week's trading session, where they pledged to cut oil production by a total of 1.6 million barrels per day, which dovetails to about 3.7% of the total global demand. And as a result of that event, we saw this bullish gap that started prior to the beginning of last week's trading session. As you can see here, between the 76 and the $80 level, we saw that huge gap which began last week, giving us a signal that we might likely be seeing a bullish momentum as a result of the OPEC Plus decision. And you all know, when it's a simple calculation, when they drop oil production, the demand for oil is going to definitely increase, and when demand increases, what happens? The price of the oil commodity will definitely increase due to scarcity. Though this implementation has not yet been effected, as we are expecting it to happen during the month of May, but the market is already reacting in anticipation of this, and this has reflected on the chart. But as soon as price climbed above that $80 level, there is something interesting that we saw happen in this market throughout the course of last week's trading session, and that was the fact that price action remained above the $80 level, did not break out of that structure, neither did it break down that level. So we had a consolidation phase here where participants are not sure what the next line of action will be. And you all know, in this kind of situation, there is always this tendency for pandemonium, indecision, and fear to happen around that area. And there is a likelihood that a choppy situation will be happening. It could be a choppy situation, a continued consolidation phase, or a retracement phase, all with the attempt to gather some momentum for the breakout of this level. Now, with the situation we have here, it is very important that we understand how price action has been reacting to the structure Hence, we need to scale down to a much more lower time frame to see if we might likely be seeing a trend continuation pattern from this area, where a breakout of the $82 level, breaking out of that channel, will give us an opportunity to buy. How we could see price action evolve into a reversal pattern where a breakdown of the $80 level will incite a move to the downside, which might likely be a retracement of that previous impulse leg that started at the $65 level in anticipation of another wave of bullish momentum. So these are the things we are going to be looking at when we scale down to a much more lower time frame. But before we do that, I would like to state here that yesterday we acknowledged the $80 level as our yardstick for trading activity this week. So what this simply means is that if price action breaks down that $80 level, then definitely this will be seen as a signal that sellers are likely coming in after citing the appearance of selling pressure below the structure on our lower time frame. But if price action continues to trade above the $80 level and we continue to see buy pressure around that area, then we shall be waiting for a breakout of structure for a confirmation for a trend continuation. So these are the things we are going to be looking at when we scale down to a much more lower time frame. So join me with the information we've had so far here to scale down to the lower time frame, and we are going to be going back into the 1 hour time frame to further see how participant has been behaving just right above that $80 mark. So scaling down into the 1 hour time frame, this is what we were able to see so far this week. We have seen a situation where the choppy situation appears to have continued anyway, but the channel we identified at the beginning of the week, which was situated between the $81 level and the $80.45 level, appeared to have been broken to the downside. And since the breakdown happened during the New York session yesterday, we have seen a situation here where price action has continued to trade below that level. Now, if this continues to the downside in such a way that price action breaks down that demand zone that we have here, which is sitting just between the $80 level and the $79.50 level, then we would have no other choice than to look out for more opportunities to sell. So at this point in time, what I want to be seeing here, especially for those who had missed out on this sell opportunity that we took advantage of at the $80.45 level, I will advise you guys to remain patient at this point to see, as we want to see how price action will be reacting to that zone between the $80 and the $79.50 level. So right now, price action is trading around that area, and for those who are taking advantage of this move, I hope you've moved your stop loss to secure this current position. And as we wait out and see how price action will be reacting to the $80 level to decide what our next line of action will be. So what I want to be seeing here is selling pressure continuing on our lower time frame, where price action breaks down that $80 level. We hold on a little bit to look out for selling pressure below the structure to give us a confirmation that sellers are gradually gaining momentum, as the continuous selling pressure below the $80 level will confirm that buyers are finding it difficult to break above that level. And if that is going to be the case here, then we look out for selling opportunities at the breakdown retest of structure on our lower time frame. This could happen on the 5, 10 or 15 minutes time frame. Look out for selling opportunities there. Then a further breakdown of the $79.50 level will definitely give us more opportunity to sell. Now, if the breakdown of the $79.50 level happens here, well, I'm of the opinion that we might be having a huge bearish traction to the downside, which might be the beginning of the inception of that retracement of the bullish momentum that we have witnessed here in the last couple of weeks. So if the breakdown of the $79.50 level happens, so we should be seeing the breakdown of the neckline of that reversal pattern here. So this area now, this consolidation phase here now, would have turned out to be a reversal pattern. So I'm of the opinion that if that breakdown happens, we might likely see a massive crash in the oil price to the downside, and in anticipation of another wave of bullish momentum. So in the meantime, we continue to hold on to a bearish bias where a further breakdown of the $79.50 level will welcome a very good opportunity to add more position to our existing trade. So that is what we are going to be looking at on the US oil here to sell the US oil. Now, you know what we do here whenever we have a bias that we are holding on to, we also want to keep tabs with the opposite expectation. So in as much as we are looking out for selling opportunities in this market, we should also take into consideration the potentials of the buyers at this particular juncture in the market. And the reason why we are going to be placing this also into our scope is because of the fact that we have been sitting on a very strong demand zone in the last 1 week, and we cannot ignore the strength of the buyers around this area. So this level has been a very strong memory for buying power in the past, and definitely it could incite a bullish momentum at any point in time. And this is one of the reasons why I said that we should be securing the current sell position in order to protect our current trade against any sudden pullback that could happen at any point. So now, if we are considering buying this, if we are going to be buying this, what structure, what pattern are we going to be seeing on the chart that will give us that confidence to open a buy position? So in order to buy the US oil based on this current structure, what I want to see here is to see price action climb back above the $80.45 level. So what I want to be seeing whenever price breaks out of that structure is to see, wait for a confirmation to happen that will suggest the strength of the buyers at that point. Now, to give you an illustration of what my expectations are to buy the US oil, I want to see price action climb above the $80.45 level, which happens to be the support line for the week here. So if price action breaks above that level, it would have broken out of that bearish trend line as well, which is more or less a sign that the trend line may no longer have the capacity to continue to hold the bearish momentum. But remember, we are not getting too excited to open the positions right away, so we are not setting any buy stop order around that area, as we want to wait for a confirmation to happen here, which is likely going to be coming in the form of a retest of structure where the appearance of buy pressure above this level on our lower time frame will give us that confirmation to buy, and a further breakout of the $81 level will be welcoming more opportunity to add more position to our existing trade. So it is quite a simple setup here, and it's nothing that's too difficult to be able to manage if we are very patient at this point. So for those who have sold right now, I've told you to secure your current sell position, and let's wait out for more selling opportunities below the $80 level. But if price action breaks out of the $80.45, we would have no choice than to start getting ready to buy the US oil for today. So these are my views here on the US oil. If you have any questions, let me know right in the comment section. So I will be moving on to the next option, which is the US tech, and I will definitely be checking the comment section from time to time to see if there are any questions for me. So with that being said here, let's move right into the US tech. Now on the US tech 1 hour time frame, what is our outlook here yesterday, and what was our expectation, and what did happen during the New York session yesterday? So if you look at the structure here, if you are taking advantage of the opportunity, you would have been in profit on the US tech so far. As you would remember, yesterday we had the simple setup identified on the 1 hour time frame after we monitored how participants in this market reacted to that our very important key level had a $13,060 mark. Remember, we identified the key level here during the live session yesterday. We shall be talking about that in a moment when we scale up into the higher time frame. And we saw our price was trapped between the $13,090 level and the $13,000 mark during the early hours of yesterday. And you all know what we look out for whenever we have this kind of simple setup. We want to wait for price action to either break out of the resistance line for buying opportunity or break down the support line here for selling opportunity. And with our stop orders at both ends, we had a situation here yesterday where price action broke down our support line at the $13,000 level to trigger our first sell position on the US tech. Then remember, I made mention of key structures that will be giving us more opportunities to add more positions. So we had a structure at the 12,950. We had a structure at the 12,900 area to add more position. And if you had done this, at least you will be in a profit of a minimum. At least price action moved, the first position moved about 150 pips. Then the second position moved about 100 pips thereabout, and the third position moved about, I think, 50 pips before we begin to see buy pressure resume. And I hope you moved your stop loss accordingly as soon as price moves significantly well in our favor to lock in some profit and lock in your position, as we saw buy pressure coming later on during the New York session to take us out of all our sell position. And since then, price action has been finding higher highs in this current market structure, hereby breaking out of that bearish trend line that was supposed to be serving as our yardstick for selling opportunity this week. And right now, as you can see, price continued to the upside, breaking out of the 13,060 to trigger another buy position at that point. Like I told you yesterday, that if price action climbs above the 13,060, we want to be looking out for more opportunities, for an opportunity to buy the US tech. Now, before I go into the details of what to plan for today, I would like us to have an holistic view of what is really happening in this market by scaling up into a much more higher time frame, which we actually looked at yesterday. And you would also see how the $13,060 level will be serving as a very important key level for us for this week. So scaling up into the daily time frame here, let's go into the daily time frame. So we reviewed this yesterday and identified a couple of structures which we said we shall be using to guide our trading activity. So for the sake of simplicity here, we'll be focusing on the price action activity since the beginning of this year. And the year started on the bullish note after springing out of that demand zone we identified at the 10,500 level. So we saw buy pressure resume here, and price continued to climb, find higher highs and higher lows, hereby transitioning into an ascending looking channel that we have here. This channel obviously has further confirmed the strength of the buyers in this market, and to further lay much emphasis on the buyers' power in this market was the breakout of that $12,800 mark. This level was a very strong selling niche in this market since the month of September last year. As you can see, every attempt the buyers to break out of the structure at every point in time has been met with strong resistance from the sellers. The same thing also happened here during the later part of last month's trading session. We saw selling niche come in before the final breakout of the 12,800 level finally happened, and this will be the first time price action would ever break out of that 12,800 level in the last 7 to 8 months. And since the breakout of that structure happened, we can see our price action has continued to move within the expectation of a theoretical understanding that whenever price action breaks out a key significant structure, we expect that it will at one point in time come back to do a retest of structure in anticipation of another wave of bullish momentum. And as you can see what has been happening in this market in the last 4 to 5 days here, you will see that after the breakout of the 12,800, we have been seeing multiple rejection of the 12,800 level, like a retest of structure at every point in time. If you take a look at the nature of the week of those candles, you will see that price action, the candles are closing in the form of an hammer candle, giving us a clue into the presence of the buyers at this particular point in time. So there is a high chance that we might likely be seeing a trend continuation to the upside. So what we are going to be looking out for on the lower time frame is buying pressure to further confirm this. And the only thing I would suggest that will give us an opportunity to sell from a long-term perspective is if price action breaks down the 12,800, where the appearance of selling pressure below the structure on our lower time frame will be giving us an opportunity to sell. So at this point in time, we shall be scaling down rather into the lower time frame, that is the 1 hour time frame, and let's see how price action has been reacting to that important zone around the $13,000 mark. So with that being said here, let's scale down to the lower time frame, and scaling down into the lower time frame, we'll go right into the 1 hour time frame here. Hold on a second, please. I'm trying to load up my chart here. Okay, so here we are. So we are back at the 1 hour time frame, and our center of focus right now will be around that $13,000 mark, which happens to be a strong psychological level in this market, and that is the support line for the week. This was a support line that was broken at the beginning of the week to the downside, which triggered our sell position in this market. And with the look of things right now, it appears that we already have a breakout of that trend line happen here. So looking at the structure and considering the breakout of that trend line, remember we identified this trend line at the beginning of the week after we connected the series of lower highs. So we saw this bearish momentum started last week here, and price action continued to find lower highs in this market. So when we connected the series of lower highs, this was the simple setup we were able to identify here. However, in as much as we saw this lower highs in this market, one thing that will have caught your attention is the fact that price action is finding it difficult to find a lower low to further confirm the strength of the sellers. As you can see, every attempt by the sellers to find a lower low has been rejected by the buyers as soon as price gets into the structure here at the 12,850. So for the sake of clarity, we need to identify and acknowledge that demand zone here. So I will be mapping that out right now. So we have a beautiful demand zone situated. What area is that? I think the 12,850. So let's label it so that we can have a visual understanding of what we are talking about here. So we place it right inside the box. Let's increase the font size of this one so that we can see it clearly. And okay, here we go. So we have the 12,850, and look at what has been happening here since last week. We can see that if selling pressure comes within this area, it has been negated by buyers. We saw the same thing happen here yesterday. So this is a beautiful sign that sellers are finding it difficult to break down that structure. And this momentum has led to the breakout of that bearish trend line, which is a beautiful signal that the trend line may no longer have that capacity to hold that bearish momentum anymore. And if we look at this from a technical standpoint, a breakout of the trend line, which is a key structure at this point, we should be expecting that one point in time price is likely going to come back to do a retest of the structure in anticipation of another wave of bullish momentum. So if that is going to be the case here, let's hold on and see how this move is going to play out. So are we going to be having price action retrace back into the trend line, which happens to share a confluence with that $13,000 mark, which happens to be the first support line for this week? That is one scenario we are going to be looking at. So if this bearish momentum continues to the downside, we don't want to panic, as we want to wait and see how far it's going to go. So if it drops into the structure and we start seeing buy pressure around this area, then we might be in for another wave of bullish momentum. So this might likely come and reflect on the chart in the form of a reversal pattern. It could be a double bottom structure, something like that, or it could be a head and shoulder pattern. breakout retest of neckline, then we could join that trend continuation to the upside. Then a further breakout of the $13,090 level, which happens to be the highest point price action has ever been this week, will also welcome more opportunities to add to our existing trade. So this is one of the scenarios we shall be looking at today on the US tech. So let's hold on and see how far this move is going to go in order to be able to catch it when it happens. Then another thing about this current structure is that if price does not drop to the downside and instead we find a situation here where price climbs up the $13,090 level and we begin to see buy pressure resume between the $13,060 and the $13,090 area, then we want to be getting ready to buy. So the buy pressure might come in the form of a reversal pattern, a double bottom structure, whatever it is that comes in there. We position ourselves at the neckline, break out of the neckline, then we join that rally to the upside there. So these are things that we shall be looking at. So, and it now depends on how price action plays out, that will determine. But one thing I will advise us to look out for are reversal patterns around this area for us to join any trading opportunity here. So on the US tech, we hold on to a bearish bias, to a bullish bias here, and I'm not seeing any opportunity to sell at this particular point in time, as the only time I will be considering selling the US tech here is if price action drops back below the $13,000 level, which was broken yesterday, and then I start seeing selling pressure resume below that structure, then I will consider selling at that point to the downside. But one key structure that I need to be broken to give me that much confidence to feel comfortable selling the US tech is this 12,850 zone, which happens to be an area that has witnessed strong buying pressure in the past. So these are my views here on the US tech for today. I hope I made myself clear. If you have any questions, let me know right in the comment section. I can see Soma 310, good morning to you. 603, good morning. How are you doing today? Valeric, how are you? Bob's 19406 is asking if the market is good today. The market is always good if you are patient to identify and wait for your structures to mature. All right, okay, I can see Benito, I can see Ralix. All right, guys, good morning to you all. And so in the absence of no questions, I want to assume that we're on the same page here. So I will be moving on to the next pair. So the next pair we shall be looking at today is the GBPUSD, I guess. Okay, so we are going to be looking at the GBPUSD. And on the GBPUSD, we also had a sell position triggered yesterday, which actually gave us some profit as we saw price action break down the 1.2400 level for the first time this week. And look at what we saw here during the live session yesterday. Remember, we saw this channel between the 1.24350 and the 1.2400 level, where price action was initially consolidating within. And you know what we look out for whenever we have this kind of simple setup. We want to see price action either break out of that resistant line or break down of that support line for trading opportunity. And with our stop orders placed at both ends, we saw our price action broke down the support line at the 1.2400 level to trigger our sell position. So we were lucky enough to be part of this move to the downside as price action moved about 55 pips in our favor before the bullish momentum began here. And right now, I hope you moved your stop loss when price action moved significantly well, as you would have been taken out with some small profit or at a worst case scenario, break even. Now, with the situation we have here, we have been witnessing the bullish momentum here since yesterday, and I wasn't able to take advantage of any selling opportunity here as I was waiting for price action to give me a reversal pattern that will give me a signal that we are going bearish one more time. And in that regard, if you remember what we saw on the 4 hours time frame here, let me go through that 4 hours time frame so that we can see things clearly. So on the 4 hours time frame, remember we identified the fact that price action has been bullish when we consider the price action activity since the beginning of last month. And to further emphasize the strength of the buyers here, we connected the series of higher lows, which gave us this bullish trend line that you can see on your screen right now. And with what happened during the New York session yesterday, we finally saw the breakdown of that bullish trend line happen, which happened to be the first time price will ever break down that structure in the last 3 to 4 months. And you all know from a technical standpoint, whenever we have a key structure like this being broken to the downside, we expect that price might likely come back to retest the structure, where the appearance of selling pressure on our lower time frame will welcome more selling opportunity. So with these expectations we have here, it is very obvious that we want to see how price action will be reacting to that structure here at the 1.24350 level, which happened to be the resistant line that we identified at the beginning of the week, which actually incited that engulfing candle that broke down that bullish trend line. Now, with the situation of things right now, with that resistant line identified here, you know that a breakout of that level definitely will be welcome in a buy position here by negating this breakdown of structure, turning it to be a false breakdown. And so when we scale down to our lower time frame, we begin to see we saw what happened around this area. Remember, that was the structure we identified at the beginning of the week, the range between the 1.24350 and the 1.2400 level, and we took advantage of the sell position here. And right now that we have a breakout retest of the structure, I was able to open a buy position at that point. And before the live session, I moved my stop loss to ensure that I reduce my loss on this trade. And if you had also taken advantage of this move, well done to you guys for being on standby to have caught that move. But if you had missed out on that opportunity, well, I would advise you that we still have more opportunities to buy if price action ever breaks out of the 1.245 level, which, as if you look in the past year, it has been a major determinant of price action. Look at what has been happening here since the breakout of this level here on Tuesday. We saw buy pressure resume around that area. We saw a breakdown retest. We saw selling pressure. And if a breakout at this point happen, I'm of the opinion that we are going to be going more bullish on this one, as price action will still be running right above that bullish trend line that we identified at the beginning of the week. So this is one thing that we are going to be looking forward to. So for those who had missed out on the 1.24350 entry, I will be suggesting that you have a buy stop order just right above the 1.24500 level, with the hopes that a breakout retest of that structure will be welcoming more opportunities to buy the GBPUSD. So going into the New York session today, we have a simple setup that we can use to guide our trading activity, and this will also make us feel comfortable in whatever position we are in. Now, one of the structure is the 1.24350, which means that if price action continues to remain above the 1.24350 level, we continue to feel comfortable in that buy position. And the second structure we are going to be using is the trend line here, which has been supporting the bullish momentum for the last 3 to 4 weeks. So if price action remains above both the 1.24350 level and that bullish trend line, we shall feel comfortable in our buy position. And this trend line and the level at the 1.24350 would also help us to be able to position our stop loss in a very reasonable area, as we definitely want to be using that structures to indicate a stop loss for our buy position here. Now, in as much as we're looking out for buying opportunity in this market, I always like us to be balanced and open in our expectations, as we should also take into consideration the opposite scenario here. Now, if sellers are going to be coming in this market, what do we want to be seeing on the chart that will make us feel comfortable selling? Now, if you consider the structures I identified earlier, which I said is going to be serving as our yardstick for trading activity for this week, you would agree with me that if price action ever breaks down those structures, then at that point we want to be seeing a trend continuation to the downside. And obviously, if we look at what happened yesterday after price action broke down that bullish trend line, price action coming back into the structure, breaking down the trend line, breaking down the 1.24350, and the appearance of selling pressure below the structure on our lower time frame will definitely be a signal that the trend continuation of the proud leading price action is likely going to be coming in. So what I will be looking forward to here is for price action to drop below the 1.24350 to start looking out for selling opportunities in this market. So if a breakdown happens, remember, we are not getting too excited here, as we still need some confirmation to happen, which is likely going to be coming in the form of a breakdown retest of the 1.24350 level to join that decline to the downside. So these are the things we shall be looking at to be part of a sell position in this market. So if you have any questions regarding what I just explained so far, feel free to drop your enquiries in the comment section below. So with that being said, here we shall be moving right into the XAUUSD, which is the gold, and let's see what has been happening on this chart in the last 24 hours. So on the XAUUSD, what is the situation we have on the XAUUSD? So at the beginning of the week, we were able to take advantage of some sell positions here during the course of the New York session yesterday, as we were able to scoop about price moved about 170 pips in our favor before this bullish momentum started happening. And during the live session yesterday, we were around this point, around that $2,000 mark, which happens to be our key level for the week, where we said price action trading below the key level will be an opportunity to sell, and price action trading above that key level will be an opportunity to buy. And coupled with the key level at the $2,000 mark was the bearish trend line that we were able to identify at the beginning of the week after connecting the series of lower highs. So we have a bearish trend line which we definitely said we are going to be using to guide our trading activity for this week. And after enjoying that bearish move to the downside, I hope you moved your stop loss accordingly to secure some position before the buy pressure took us out of that position. So after the price action took us out of our sell position with some small profit around that area, what I would notice during the early hours of today was that breakout of that trend line to the upside, which is a sign that buyers are likely going to be coming in. And at the same time, it also gives us a clue into how the bearish trend line may no longer have the capacity to support bearish momentum in this market. And the breakout retest of that level triggered the first buy position for the week around this area. And for those who are taking advantage of that opportunity, well done to you for being on standby. And one thing I'll be advising us that we should give room for price action to breathe around this area is we should be having our stop loss sitting somewhere right around the $1,992 level, which will be dovetailing to about 80 pips thereabout. And the reason why I have said this is simply because of the fact that price action happens to have broken out of both the $2,000 mark and the bearish trend line that we identified at the beginning of the week. And you all know from a technical standpoint, whenever price action breaks out of a key significant structure like this, we expect that one point in time price is likely going to come back to do a retest of that structure, where buy pressure around this area on our lower time frame will be an opportunity to join or add more position to your existing trade. So because of this reason, we want to be ensuring that we have our stop loss order around that area. Now, for those who had missed out on the buy position that we took advantage of during the early hours of today, well, I would advise us to remain patient, as there is still a chance that we could still join this bullish momentum to the upside. So as long as price remain above both the $2,000 mark and the bearish trend line in this market, we continue to look out for buying opportunity. So this is going to be our yardstick for trading activity today. So we have a bearish trend line, we have the $2,000 mark. As long as price remain above the structure, we look out for more buy positions to add to our existing trade. Now, with the situation we have right now, we have a key structure at the $2,008 mark, which happens to be where price action started this week, and that is actually the highest point price action has ever been for this week. Then we saw a couple of hours ago where a sharp rejection of that same level happened. So for me, at this particular point in time, a breakout retest of the $2,008 level will be an opportunity for me to buy, as the breakout would have taken out all the sell position along the $2,008 mark. And considering the fact that price is trading above that bullish trend line, I will feel comfortable above that level to buy. So with the situation we have here, a buy stop order above the $2,008 mark seems most appropriate at this point. And then we'll continue to monitor price action. If it does happen that price action ever continue to the upside, breaking out of that $2,020 mark level, another psychological level to look forward to, which was respected in the past by selling pressure, a breakout of that level also will definitely be welcoming additional position to our existing trade. So these are my views here on the XAUUSD for today. I will continue to look out for more opportunities to buy the XAUUSD. And to further buttress the bullish momentum that we have in the market here is the fact that price action has found it difficult to find a lower high. As you can see, we have a demand zone just sitting around the 1,989 level, which has been negating all selling pressure in this market. But if at any point in time price action drops below the 1,989 to the downside, breaking down the demand zone with selling pressure below the structure, then at this point we might be considering selling the XAUUSD. But if this does not happen, we continue to hold on to our bullish buyers in this market. So these are my views here on the XAUUSD for today. I hope I made myself clear, and I'm very sure you are well equipped enough to be confident enough to take advantage of any potential trading opportunity in this market for today. I see your comments, Steamroller. Steamroller wants us to look at the TP target for the USOil before. Okay, all right, okay, I will look at that before I close for today. So I hope you're still around to listen to that. All right, so moving on now, we are going to be treating the last pair for today, which is the BTCUSD. And in fact, for those who took advantage of that buy opportunity on the BTCUSD yesterday, will definitely be in a massive profit at this point in time. And if you remember vividly what we talked about on the BTCUSD yesterday, we identified the fact that price has been bullish initially, and this was identified on the 4 hours time frame. So for the sake of clarity, let's run through the 4 hours time frame to review what we looked at on this chart. So yesterday during the live session yesterday, we were around here. Okay, so we were around this point here yesterday within the channel between the 28,500 and the 28,250 level, where we actually identified that simple setup. And I told us all on our 1 hour time frame that whenever we have a simple setup like this, we all know what to do from the back of our mind, that we want to either see a breakout of that resistant line of that channel or the breakdown of the support line of the channel for a trading opportunity. And as you can see here, we had our buy stop order above the 28,500 yesterday, and we had the buy position triggered. And I also told you of the structure at the 29,400 yesterday here, where a breakout of that level also will be welcoming additional position. So for those who are taking advantage of this trading opportunity yesterday, you would have been in a massive profit on the first position. If you still have your positions running, you will currently be running with over 170 pips in profit on the first position. And on the second position, you will be running with about 84 pips in profit, with a total of over 300 pips in profit at this point. And you all know what we look out for whenever we are running in a massive profit like this. We want to be securing our position by moving our stop loss accordingly. And from the current structure we have here, the most appropriate area I think that we can move our stop loss, especially for those who are still having an open position on the BTCUSD, is to move the stop loss to somewhere right around the below the 29,800 will seem most appropriate, as we want to wait out and see what happens around the consolidation phase that we are witnessing right now. So with that being said here, congratulations to everyone who has been part of this bullish momentum in the last 24 hours. Well done to you guys for being on standby to have caught that move. So now that we are heading into the New York session today, what is going to be our plans on the BTCUSD? Are we going to continue to look out for more buying opportunity, or are we going to be considering the rejection of the $30,400 mark to start looking out for selling opportunity? Obviously, if you look at this from a psychological perspective, those who are taking advantage of that bullish move from a much more lower price will definitely want to be doing some profit-taking activity, hereby giving us a situation where there is a likelihood that a retracement phase could happen into structure before another wave of bullish momentum will happen. So in as much as we're looking out for more buying opportunity in this market, we would also consider the potentials of sellers coming in as well. So before we go into the details of how to take advantage of any trading opportunity right here, what we are going to be doing is to identify and map out the structure to see what is really going on here. And in order to do this, we will be using our line chart, and what we do here is to identify the support line first of all, which falls exactly at the $29.900 level. What a psychological level that is. So we shall be labeling that area. So we have the 29,900, I guess. Yes, we label that area. So we have the 29,900. Give us a black color, and I will place it below at the bottom right hand side of my screen. And then we have the resistant line sitting around the, let's see, that's around the 30,220 level. So we shall label that also 30,220 level. Place at the top right hand side of my screen, and then we have a beautiful channel which could either transition into a trend continuation pattern, where a breakout of the $30,220 level will be welcoming a buy position, hereby giving us a trend continuation pattern. Whereas a breakdown of the 29,900 with selling pressure below the structure will be welcoming a retracement into our golden zone area. And talking about golden zone area, this is an area which falls within the 50 and the 78.6% of our previous impulse leg. So if we take this impulse leg into consideration, then definitely a breakdown of the 29,900 will be giving us a retracement into a structure between this area, where we shall be looking out for a potential buy window for a trend continuation to the upside. So let's see how this plays out in the next couple of hours. And I hope I was able to make myself clear here. So where we shall be looking out for a buy opportunity above this area. But if the breakdown of the 29,900 level does not happen, then we shall be anticipating an opportunity to add more buy position to our existing trade on this chart. So let's see how this plays out in the next 24 hours, and obviously we shall be coming back here tomorrow to give an update on what our expectations are and how to manage our existing position. So on this note, I would like to call it a day here, and to fulfill my promise to Steamroller regarding the TP target for the US oil price. So let's run through that US oil and see where the potential sell potential TP target will be. So at this point, we have a sell pressure continue to the downside right now. So I have told you earlier that a breakdown of the $79.50 level will be welcoming a massive sell position in this market, as this is the last platform for any buying niche in this market. So a breakdown retailers will welcome more position here. And to identify the TP target for our sell position here, we would want to scale up a little bit into the higher time frame, where we are going to be taking into consideration the impulsive move that started at around the $73 mark to the upside. And in order to do this, we are going to be bringing out our Fibonacci retracement tool. We run it through the previous impulse leg here, and we aim at an area between the 50 and the 78.6% of the previous impulse leg. So this area will be serving as a potential TP target for sellers, and this area will also be serving as a potential buy zone if we start seeing a reversal pattern resume from that area. So our TP target falls within the $77.20 level and the $74.70 area for our TP target if price action finally breaks down to $79.50. So we should be having a whooping of a minimum of 300 pips to a maximum of about 580 pips to catch here on the US oil. So let's see how this plays out. I hope Steamroller is in the house. If you are, I hope you got that right, and let me know in the comment section if you really do. So on this note, I wish you best of luck today. It has been a wonderful moment with you guys today, and I advise that we all remain very patient, wait out for our structures to mature before we want to jump into any position in this market. So thank you for being around, and for our newcomers, I hope you are able to take one or two things with you as you prepare for the New York session today, and I look forward to seeing you guys tomorrow same time, 10 a.m. UTC, 11 a.m. West African time, as we come here again to review how well the positions we are in has been doing so far, and at the same time get ready for the New York session tomorrow. Do have a wonderful evening, everyone. Bye bye.